Good afternoon and welcome to the Essential HR Podcast. I'm your host, Brian Gorman, here today with Mary Stines, Federal Tax Senior Manager at Crowe. And I am very much looking forward to spending time with Mary today and talking about year end and taxes and getting your small business ready for year end. So, Mary, thank you and welcome to the show.
Well, Brian, thank you for having me. I think this is a great opportunity to talk to your clients and prospects on some ideas to get ready for the end of the tax year.
Absolutely. Mary, why don't you start? Maybe tell the audience a little bit about you, what you do, and your role at Crow, and maybe a little bit about Mary Steins.
All right. Well, I always start off with this kind of little bit of a joke. I've been with Crow for 32 years, and Crow has a very young recruiting policy. So I'm only 39. And I have been working with small to middle market clients most of my career at Crowe. And I work from a client consulting and tax advisory role. I like to think of myself as one of their trusted advisors. I have about half of my client base is healthcare, and the other half is a mixture of manufacturing and distribution companies. I focus in flow through taxation, which is partnerships, S corps, and their shareholders' individual taxation. And that's what my passion is. That's what I do, and that's who I am.
Awesome, fantastic. Well, again, thanks very much for your time. And I kind of wanted to get started. With 2020 obviously being a really challenging year for all of us, right? But when it comes to small business owners, and as we approach the end of the year here, what needs to be top of mind for a small business owner as they approach year end and get ready here for the end of 2020.
Well, I think the most advantageous thing that your small business and middle market taxpayers can be doing is having an idea of what their taxable income is now. So taking a look at their fixed assets, what have they bought? Can they take bonus depreciation, Section 179, and the PPP loan? We'll get into that in a little bit
Yep.
later in your next part of the discussion. And just having an idea, do I need to pay in some more estimated tax payments? Either through the corporation or through their personal flow through taxation. Am I in a situation where I have income going up? And if that's the case, there's a safe harbor exception one where you want to have 110% of your prior year taxpayer tax liability paid in, or exception two, the things have not been as well for you as they had in the previous year. You'll want to have 90% paid in. And that's paid through quarterly estimated tax payments and or withholding if you have payroll. The last fourth quarter estimated tax payment is due January 15th of 2021. So be working with your accountants and your tax advisors to have an idea of what your taxable income is now. There may still be a little bit of opportunity to make any adjustments, pay some bills, recognize some income, those kind of things, but be prepared.
Perfect. And I know you mentioned a little bit about CARES Act, PPP loan. I think Secure Act is another one that we talked about earlier when we talked yesterday a little bit about our show. And then I think the TCSA, I believe, correct? Is that one?
TCJA,
J.
and
Okay.
that was a monumental tax legislation, and that's the 2017 act that brought in bonus depreciation at 100% and a lot of other tax provisions. So that's really, it's not behind us, but it's certainly not new news anymore. I think the big thing for businesses to be aware of under the CARES Act is the PPP loan.
Okay.
So when your small businesses went to the Small Business Administration and said, I need some help, I need some cash
Hmm.
to keep my business afloat and keep my employees employed, they partaked in the PPP loan.
Hmm.
And the intention of Congress was that this PPP loan was going to be a forgivable loan that was not going to impact their taxability or their income to where they'd have to pay tax on it.
Hmm.
And that was always the expectations and the intentions of Congress. Well, we asked for clarification on that, and we got it, but it wasn't what we'd hoped for. And what happened in November, I think 16th it was, the IRS came out with clarification.
Hmm.
And what they said was they are going to respect the law as is. And the law currently written that they're referring to is when you have tax exempt income. And originally the law was written for if you had tax exempt bonds, for example, and you had expenses associated with that tax exempt income, such as investment portfolio fees, you couldn't take those as a deduction because they were for expenses relating to tax exempt income. So the PPP loan, the tax exempt income is still there. If you meet all the requirements that they asked you to do,
Hmm.
you apply for forgiveness, and your loan is not it's something that you have to give back. Okay. But here's the clitcher that really kind of is a double whammy and threw everybody for a loop, and the clarification was not what we expected,
Hmm.
is they said that the expenses relating to that PPP loan are not deductible. So what expenses did people use with that PPP loan? They paid payroll, they
Hmm.
paid rent, paid utilities, they did what they were supposed to. So those expenses are not deductible on their tax return. They don't have to pick up the income, you don't have to pay the cash back, but those expenses are not deductible. So what if you don't know if the loan's going to be forgiven or not? Well, the
Hmm.
clarification on the revenue ruling that came out said that if your intention was it was going to be paid back, and you did everything right, and you just don't have the approval from your bank and or the SBA, then you are to treat it as though it is a forgivable loan,
Hmm.
and the expenses associated with that are not deductible. So what's that doing to a lot of small businesses is they're thinking they had a terrible year and an awful loss.
Right.
Well, some of them are turning around, they got taxable income.
Mm.
Now, the flip side of that is a revenue procedure that came out that said if you did not meet the requirements and the loan has characteristics that it's going to have to be repaid, whether or not you have that approval from the Small Business Association that it does have to be repaid, again, your intention is to have that repaid. You have to act as though it's going to be repaid, and you then are able to take those expenses. So, the problem that the double whammy comes in effect is this came out in the middle of November.
Hmm.
You got your
Right.
money 6 months ago. Your intention is clearly well documented in your payroll and what you've done in your books and records.
Hmm.
So to me, that's kind of I refer to it again as the double whammy. It kind of sucks these small businesses and middle market clients to where, they're scrambling trying to plan for their taxable liability in their year end.
Sure.
So, yeah, good news, bad news on that. Good news is you got the cash, you don't have to give it back. The
Right.
bad news is you're probably paying upwards, if you're the highest bracket, 40% tax on that.
Mm, no, absolutely. Great information there, Mary. Thanks for sharing that. And I wanted to talk a little bit about child education credits. There's a ton of great opportunities here with 529 plans and
Mhm.
ESAs and the achieving a better life experience, the able accounts that you mentioned like yesterday as well. What should the average taxpayer do prior to year end to take advantage of these opportunities as well?
Well, this is an individual question.
Okay.
So the big thing that I think is the greatest deal out there from an educational expense side is the 529 plan.
Mm,
I've used it myself for my kids. It's a great way of saving for your college education for your children.
sure.
And it makes it very easy when you want to start drawing it out. They can take the checks and they can direct it directly to the bursar's office. And if your child number one doesn't use it at all, it can go to child number two. So there's excuse me, I don't want to lose. I'm going to ignore that. I apologize. Um,
Oh, no worries.
so I'm sorry again.
I can see you.
Okay, still there? Very good.
Yep,
All right.
perfect.
So got rid of that. I wanted to be careful I didn't cut you off as well.
No, that's fine.
So with that being said, the 529 plans for Indiana, College Choice 529 plans for Indiana, and there are other states as well that have similar credits available. Indiana offers a 20% credit.
Hmm.
So that means you can put in $5,000 into your Indiana 529 college savings plan, and you can then also get a 20% credit, not a deduction, a credit on your tax return. So that is actually a phenomenal way of getting money back into your pocket. And we talked about the TCJA
Yeah.
opportunity. And what that means is they allowed you to be able to pay for your elementary and secondary educations. So as we're thinking about this COVID-19 and the
Hmm.
challenges that it's placed in the parents paying for maybe a private school or changing your elementary and secondary education, maybe you're paying things, you're going through some of these um, self education where you're teaching your children at home outside of the school system.
Hmm.
You can pay for that with the 529 plan deductions. The 529 plan, the money that is earned in those grows tax free as long as you take it out and use it for your educational expenses. So a great, fabulous opportunity there for your children's education. Any questions on that before we move on to the next one?
No, I think that that's again great information, and uh, just very top of mind right now, especially with year end coming up, and
Mhm.
taking advantage of that. Now maybe narrowing it down to one thing that a small business owner needs to do maybe today, right now, to ensure success for them,
Mhm.
as they with 2 weeks left. We're recording here on December 15th with 2 weeks left until the end of the year. What would be maybe one or even two things that, hey, year end's approaching fast. What can I do today to ensure that I'm ready for it?
Okay. Well, there's an adage in real estate that says location, 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 and I
Mm,
documentation is your best recommendation for a small business. When it comes to your audit protection, again, if your records are clean, your agent's not going to be digging into anything. If your records are a mess and disaster, your agent's going to be digging into some things if you were audited. So I think that's the first and foremost thing I believe. And I go back to what I talked about before with, being planned and being ready for it, with regard to knowing what your tax liability is ahead of time and being able to make some plans accordingly. And then if you're the individual side of it, there's an array of things that you can talk about from an individual perspective. Um, the 401k deferral, if you're not maxing that out
mm-hmm.
and making sure that your employer's match is part of your benefit package, you're taking away some taxable fringe benefits that or that you should be partaking on. That's part of your compensation.
Mm-hmm.
So make sure you're participating in that. Your 529 plans again were one things that we talked about.
Yep.
And then on an individual standpoint, we don't really know what's going to happen with the Senate race right now.
Right. Right.
If Georgia prevails and the Republicans maintain control over the Senate, some of Joe Biden's proposals are going to have some difficulty getting through.
Sure.
If the Democrats have control over the House and the Senate and the White House, there's some sweeping tax proposals for President-elect Joe Biden, that we will see some of those things come into fruition.
Hmm.
Whether or not they make it retroactive to 1/1 of 21, we don't know.
Okay. And that leads to the uh, additional question here about that. When we talk about a new administration in small businesses being prepared for that, and it's hard to have a crystal ball, right, to kind of see what the future is going to bring. But maybe in your opinion, what should a small business be prepared for with a new administration taking control here in January?
Well, there are a lot of things that are in his proposals to change. And from a small business perspective, the corporate C Corp tax rate is looking at going up a little bit from 21 to 28%. And the flow through deduction on the 199A, the manufacturing deduction, or part of the TCJA that made the corporate tax equivalent in Congress's mind to the flow through at an individual level, that's looking at potentially being eliminated. There's all sorts of energy incentives and proposals out there. I also believe there's some discussion on retirement plans where the deduction will go away for the corporation's contribution in lieu of a credit for lower income individuals. There are tons of changes out there. And I'll speak with a couple more from a high individual net worth that, if you are fortunate enough that you have $1 million in taxable income, President-elect Joe Biden's proposals are to tax your ordinary income, capital gains, and qualified dividends at the ordinary income rate, and then also taxing them with the NII investment income tax rate, that's the 3.8%. So for those earning over $1 million, you could be forced to be paying 45% almost on your portfolio income. For individuals earning more than $400,000, the Medicare FICA limitation stops. It's taxed at the 7.65% when you're over 400,000. So as a payroll company, that's something I'm sure your firm is watching very closely to see if you've got to reprogram some of your software for that.
Absolutely.
So there are tons and tons of resources out there. If you go to www.crowe.com and register for our push emails, we have had a scorecard election series that has just gotten phenomenal reviews.
Very well done. Yep.
They are out there. You can download them. They're free for the taking. They're easy to read. We just had a webinar yesterday for about, it was 1 to about 4 o'clock in the afternoon discussing all of this. So I would expect in a short time frame that to be available on our webpage as well. A lot of great resources out of there, a lot of things changing. And with tax, there's never anything there's not such a thing as a tax cut. It's just really tax appropriation.
Sure.
Takes it in the left hand, puts it in the right hand and just redistributes what's out there. So that's what I would encourage your listeners to do is to, be informed and ask questions. If you don't get the answer that you're looking for from your current provider, let me know. I'm more than happy to help out and answer any questions anybody might have.
Oh, absolutely. And how would someone, obviously with the Crowe website there, but how would someone get a hold of you if they want to reach out to Mary Stines directly? LinkedIn? What's the best way to get a hold of you?
You can certainly do LinkedIn.
Okay.
My email address is very easy. It's Mary, Mary, period, Stines, Stines, at Crowe.com.
Perfect. And I'm gonna put you on the spot a little bit, but we talked a little bit about big game this weekend, Clemson, Notre Dame, and with the ACC championship. So any score prediction from Mary Stines?
Well, I'm not much of a football fan on that, although my daughter and my husband were fortunate enough to go to the Clemson Notre Dame game.
Round 1, yeah.
And a monumental time on that, one of the games of the century, I think. So no predictions. I don't even know where to start.
No, I will go 21-20 Notre Dame, just because. And again, full disclosure, we're in South Bend, Indiana, so it's in our backyard. So it's a fun time to be a Notre Dame fan. But Mary Stines, thank you so much again for your time. It's great information, and really appreciate our friendship, and wish you a Merry Christmas, a Happy New Year. And again, appreciate it very much. Thanks, Mary.
Thank you so much, and I appreciate you having me. You have a great rest of the day, and happy holidays to your listeners.
Thank you.
Bye-bye.